Hello and welcome to the channel. In this video I'll be talking about the Bollinger Band Forex indicator and its entry and exit conditions. Before I dive into the video proper, if you're new to this channel, do consider subscribing. Also click the bell icon beside it, that way you get notified anytime I upload a video. So with that being said, let's dive into the video. Before I say anything about the Bollinger Bands indicator, I'll first of all show you how you can add it to your trading chart if you're trading with the mobile version of the MT4 or MT5 platform. So let's go. Okay, we are on to the charts now. Let me show you how you can add Bollinger Bands to your trading chart. So this is the landscape view. On the landscape view, this is how the portrait view looks like. This is how the portrait view looks like. So to access your indicator on the portrait view, what you just do is you tap the screen, then you click on this F button right here, the F button right here. It will take you to the list of indicators. So if it's a landscape view, what you just need to do is once you tap on the screen, you see the F button at the right hand corner. So you click on the F button. It will take you straight to the list of indicators. So as you can see, this is the Bollinger Bands here. So you click on Bollinger Bands. You don't need to change anything. You just go ahead and click on the done button at the top right corner of your screen. So once you do that, this is what you see. So this is a 1 minute chart, so 5 minutes. So let me give you a brief explanation of what Bollinger Bands is all about. Bollinger Bands is a volatility indicator, but can also be used to identify trends. Because it can be used to identify trends, I also see it as a trend indicator. It's also important you know the Bollinger Band is a lagging indicator, meaning it moves after the price of an asset has moved. So it's not an ideal choice to use in generating buy and sell entry signals. But you can use it as confirmation for signals you generate through chart pattern, other indicators, candlestick pattern, etc. Bollinger Bands are made up of three lines plotted at a standard deviation level above and below a simple moving average of the price. Because the distance of the band is based on standard deviation, they adjust to volatility swings of the underlying asset. As you can see on your screen, the first line here is called the upper band. As you can see, the first line is called the upper band. Then the middle line is simple moving average. And the line below is called the lower band. Let me explain how this indicator works. First, when the band tightens during a period of low volatility, it raises the likelihood of a sharp price move in either direction. This may begin a trending move. So let me explain what I just said. From the chart, you see that the bands here, the upper band and the lower band, try to tighten at this point. As you can see, once the band start tightening, there is every tendency that there's going to be a sharp breakout, and this may be the beginning of a trend. So the upper band and lower band try to compress at this region. So this indicates that there is a sharp movement. As you can see, there was a downward trend here. So the second thing you need to understand about this indicator is, so when the band separates by an annual large amount, volatility increases and any existing trend may be ending. So if you look at this place here, you see there was a big gap between the upper band and lower band. The same thing here. This simply means that the current trend is about to end and a reversal might likely take place. The third thing you need to understand about this indicator is price have a tendency to bounce within the band's envelope, touching one band, then moving to the other band. You can use these swings to help identify potential profit target. For example, if a price bounces off the lower band and then crosses above the moving average, then the upper band becomes the profit target. Another thing you need to understand about this indicator also is that a strong trend continuation can be expected when the price moves out of the bands, out of both the upper bands or lower bands. However, if price moves immediately back inside the bands, then the suggested trend is negated. Here, you see that the price moved a bit above the upper band here, meaning that it is overstretched. So a reversal happened. And if you look at this place, let me zoom it. You see here, the price bounced off the low upper band and it continued. It did not reverse. It just reversed a little bit back to the moving average. Then it continued. It bounced off again, bounced back to the moving average. It continued again. Once the price bounces off either of the band, either the upper band or the lower band, that shows that the trend might actually continue in that direction. But here, that is not the case. Let me zoom it. So that was not the case here, because here, fine, here the price bounced off the upper band and showing, meaning that it's overstretched, then it reversed. It hit the lower band, then it reversed. It hit the upper band here, then it reversed again. But it broke out the lower band here. Instead of it to reverse, it did not reverse. It continued breaking out the lower band, continued breaking out the lower band and reversing a little bit, breaking out the lower band and reversing a little bit. So that is how this indicator works. That's it for this video. If this video was helpful, don't forget to give it a thumbs up. Talk to you on my next video.